In the third quarter of 2025, the Malaysian economy recorded a strong growth of 5.2%. This was contributed by household spending, steady investment activities, and continued export growth, supported by E&E sector, robust tourism activity, and strong recovery in mining-related export. On seasonal adjusted quarter-on-quarter basis, GDP saw stronger growth momentum of 2.4%, higher than the 2.2% recorded in the second quarter of 2025. On the expenditure side, domestic demand was driven mainly by sustained domestic demand and higher net export. Private consumption was supported by positive labour market condition and policy measures. Meanwhile, investment growth was driven by further capacity expansion by firm and robust construction activities, as well as continued capital expenditure by public corporation. On the external front, the expansion in net export was driven by improving export and a sharper moderation in import, particularly for intermediate and capital import. On the supply side, all sectors continue to expand. Sustained growth in the services sector was driven by consumer-related sectors. The manufacturing sector registered a higher growth driven by stronger production in E&E and consumer-related goods. The construction sector continued to record robust growth across all subsectors. In the commodity sectors, the agriculture sector experienced a moderation driven by slower growth in rubber, oil palm, and other agriculture subsectors. However, the rebound in mining sector reflected recovery in LNG and crude oil production from post-plant maintenance.
Malaysia's economy grew by 4.7% in the first 9 months of this year, and this is well within our forecast range of between 4 to 4.8%. In fact, at this rate for this year, we may record a growth rate that is closer to the upper range of this forecast. And moving into 2026, as announced by the Ministry of Finance last month, economic growth is expected to expand between 4 to 4.5% next year, and it will be driven by domestic demand. Household spending will be supported by the continued employment and wage growth, the income-related policy measures, and also the additional cash transfers by the government. Furthermore, investment activities will be sustained amid the progress of infrastructure projects, realization of approved investments, and the implementation of our national master plans. On the external front, we expect moderate export performance as tariff and global demand pressures will be offset by the continued demand for E&E goods, inbound tourism, and recovery in the mining-related exports. Headline inflation remained unchanged during the quarter at 1.3%, while core inflation increased to 2%. The higher core inflation added some upward pressure on headline inflation. However, this was offset by declines in some administered prices, namely electricity and diesel, which kept the headline inflation stable for the quarter. In part, the lower administered prices reflected the impact of recent policies, namely the electricity tariff restructuring, which resulted in lower electricity bills for most of our Malaysian households.